Once again to another price action replay powered by your very own multi.io. So how are things looking? Well, legacy and crypto markets saw a strong correction today as traders fear that a second round of economic stimulus might be delayed as the White House, Senate and Congress could become entangled in a fight to fill the vacancy created by the passing of Supreme Court Justice Ruth Bader Ginsburg. In addition to this, financial stocks are leading the bloodbath as reports emerged that several banks could have been involved in facilitating the movement of over $2 trillion over a 2-decade period. These suspicious transactions have been flagged as possible money laundering or criminal activity by the bank's internal compliance officers. While Bitcoin price is correcting today, this exposure of potentially illegal behavior by banks will only strengthen the narrative for why investors should buy Bitcoin. So how about that correction? Well, Bitcoin turned down from the 50-day simple moving average of 11,225 on September 19th and broke below the 20-day exponential moving average and the 10,625 support today. This will suggest that the bears used the recent relief rally to $11,000 to initiate short positions. The bears will now try to sink the price below the $9,835 support, and if they succeed, it could result in panic selling that may drag the price down to $9,000 or even further. If this sharp fall was followed by a strong rebound, it would suggest that the bulls are accumulating at lower levels, and such a move might attract several buyers once again. However, if the BTC-USD pair falls to rebound quickly from the lower levels, then the recovery is likely to take much longer as the bulls will then wait for a bottom formation to complete before buying. Contrary to these assumptions, if the pair rebounds off the $10,935 support, the bulls will once again attempt to push the price above the downtrend line. If they succeed, then the uptrend is likely to resume. And how about our dear altcoins? Well, September, hardly a month to remember. Nonetheless, let's see if we can find some light at the end of the tunnel. First up, we have DAI, a crypto-backed stablecoin that is soft pegged to the US dollar. With today's and last week's market downturn, it's an important reminder to always have stablecoins ready for days like these. That is why today our first featured coin is DAI. DAI's price is meant to be stable against the dollar, since every loan taken when DAI is minted equals $1 backed by Ethereum. But in the last month, DAI has reached the price as high as $1.07 because of the demand caused by liquidity farming. Since DAI is less capital efficient than centralized alternatives, DAI farming pools had less deposits, making the share of the rewards higher. With regards to latest developments, Maker, the protocol that powers the DAI stablecoin, has been fighting hard to bring the price of DAI back to $1 from its average trading price of $1.04 this month by increasing the debt ceiling. In the last 30 days, the amount of DAI that has been minted has increased from 440 million to 845 million, a 100% increase. It took DAI over 2 years to reach $500 million minted, and now it's on its way to reach $1 billion within 30 days of passing the 500 million milestone. Recently, the discussion around using Uniswap's liquidity provider tokens as collateral to mint DAI has started. This would increase the usage of the protocol by allowing otherwise idle assets to be leveraged. Up next, we have Meme. Yes, you heard right. Meme is a non-fungible token protocol that allows you to stake tokens to farm limited edition non-fungible tokens that present digital artwork. The NFT tokens can then be sold in OpenSea.io, the largest decentralized exchange of NFT assets. The integration of yield farming to mint NFTs that represent crypto influencers has made Meme find a niche audience that is willing to pay for this type of digital art. The Meme token has exploded in value in the last week and is currently up 1,600% and 2,000% in the last 30 days. The max supply is 28,000 tokens and 100% of the supply is already 100% liquid when all of the tokens were airdropped to the Discord community members. The token is not yet listed on any of the major exchanges, therefore price discovery is still very much in effect. And lastly, for our beloved buy the dip section, today we have Bancor, a decentralized AMM liquidity pool on Ethereum and EOS blockchain. Bancor is down 32% in the last week and just over 60% in the last 30 days. The BNT token started performing very well and reached $2.50 at the end of July with the news of a major protocol upgrade. But since the upgrade was delayed 2 weeks later, the token took a downturn, with the token now trading at 80 cents, about a 200% decline. The most recent development has been the Bancor V2 upgrades that will allow users to deposit a single asset into a pool and comes with impermanent loss mitigation. Bancor V2 was announced live on July 31st, but in a cap setting of only 2 pools that are limited to 1 million in deposits. There have been no updates on Bancor V2 since then, and the Bancor V2 pools remain capped with no users being able to deposit to them. Now, thank you very much to everybody for joining me once again for today's price action replay powered by multi.io. I hope you have a fantastic day. Take care. Thanks very much.